Hello and welcome to Smart Investing Market Insights on TFNFinancialNews.com. I'm Krista Das. Gold, oil, the falling dollar, the Iraq War, and the U.S. housing market. All reasons not to be overly enthusiastic about growth. For years we've been preparing for recession, but the S&P and the Dow are doing well. People want to invest. My next guest says the wall of worry that has held back the general market for the past 6.5 years is being cast asunder by the backhoe of corporate profits and the dynamite of global GDP growth. Christian DeHamer, lead publisher of Red Zone Profits, is here to tell us what sectors will be the big winners in the fall. Chris, welcome to the show.
Well, thanks, Krista. Glad to be here.
So, Chris, explain your take on the market in its current state.
Well, Krista, ever since the tech wreck and subsequent low in 2003, global equities haven't been quite able to get back in the saddle. Growth stocks were rejected in favor of the safety of portfolio preservation. It's more about a bounce-back market, a survival tale rather than a growth story. That's changing. The U.S. market psychology is turning from fear to greed. And one of the most commonplace fears, the biggest brick in the proverbial wall of worry, is the debt-driven nature of the U.S. economy, currently fretting about subprime weakness. Paradoxically, these worries have provided support for the current 4.9% global GDP expansion by suppressing bond yields. This is proof that investors have been playing safe.
Indeed, Chris, despite the recent strong rally suggesting that the wall of worry is beginning to crack, like you said, bond yields remain well below historical averages, especially when viewed from a global perspective. But there are still pessimists out there. How will this make the bears bullish?
Well, this situation has created more liquid and fertile environment for the equity markets to grow. The current bull market is happening in spite of itself. It's a true contrarian cycle. The wall of worry is starting to come down. Bears are converting.
But what about summer lows? Aren't you predicting a market correction?
The current summer lull is not a lull at all. The dip has been so shallow it's over. Right now the Dow is 100 points away from its all-time high. I expect it could go up another 2,000 points over the next 3 quarters. It is becoming apparent that the world is now, at long last, listening to the growth message that the equity market has been broadcasting for some time. Therefore, we are looking for signs that a true breakout will occur.
What sectors should we keep an eye on?
I believe that technology will at long last get its day in the sun, along with healthcare, and of course energy are still on my buy list.
And your reasoning behind this?
First off, global GDP is expected to grow at 4.9% next year. All the speculative money that went into housing and commodities and small cap stocks, the Russell 2000 is up 158% since 2002. That's a big number. Meanwhile, the S&P 500 has a PE of just 17. That's well below its 25-year average of 25. Much of the commodity boom, roughly 1/3, can be directly attributed to the falling dollar. All of these are near the tail end of the cycle. The dollar will turn around at some point, and the last time we saw the dollar turn around was in the early 90s. And when it turned, it produced the biggest bull market of all time in the NASDAQ. I believe you should buy low and sell high. That's how it works. Growth is now undervalued. Healthcare companies such as Merck and Schering-Plough are underrated, though we are starting to see some movement on these. And regarding tech, all those promises about 3G phones, broadband to the home, the ubiquity of internet-capable flat screens, all this has come true. 5 years late, but they're here now. Companies that are making money from that, and Wall Street no longer cares. I see opportunity there. In fact, we've discovered the component makers of the iPhone, and many of those look like nice buys.
Chris, thanks for your market insights.
Always a pleasure, Krista.
To learn more about opportunities that Chris has identified in the energy, tech, and healthcare sectors, as well as his service, Red Zone Profits, click on the screen or go straight to TFNFinancialNews.com. That's all for today's program. Until next week, here's to great profits from Smart Investing.